week's query of the week. So this week, my name is John Murphy, and I work in the OmniPro practice support and tax side of the business. So I'm going to just go through a query we got during the week. It was when we were giving advice, I suppose, on taxation. There's just a client made a fair comment that said, look, nowadays, what is the difference between tax avoidance and tax planning? I suppose there's no easy answer to that question. It's very hard. There's such a fine line now that you might think it's tax planning. Actually, it turns out to be tax avoidance because there's so much anti-avoidance being put into the legislation at this point in time. But I suppose in practical terms, what tax avoidance is defined by the revenue as is claiming a relief in a manner that was unintended to be claimed, or the motivation for doing something was to get tax relief. So that's effectively it. So there is a fine line there between the two, tax avoidance versus tax planning. I suppose from a legislation point of view, there's two types of anti-avoidance. There's specific anti-avoidance and general anti-avoidance. So specific anti-avoidance is where I suppose it's easier for the revenue to pull you up, and that effectively is where it's where the main purpose is. Was the main purpose or one of the main purposes for the avoidance of tax? That's what they're checking, that one. The other one is a general anti-avoidance. So that's the one they'll fall back on if there's no specific anti-avoidance. And effectively what that's looking at there is, was the primary purpose for the avoidance of tax. So it's easier to get over the general avoidance one because you only have a primary purpose. So usually if you can give a commercial, bona fide commercial reason for it, you're going to be able to get out of general anti-avoidance legislation in that respect. But the specific legislation is where it all is, because there it's not just the primary purpose, it's the main or one of the main purposes. So I suppose that is so important. You know, the examples of where specific anti-avoidance is in section 598 retirement relief, entrepreneurial relief, section 600 incorporation relief. So they're just examples of where specific anti-avoidance is included in the legislation. General anti-avoidance is the fallback approach for revenue. So you can see it's a very fine line. I suppose, what do I say to advisors in relation to this? They have to be very careful when they're drafting reports to clients that their wording doesn't help, let's say, the revenue to place an argument that here now it's actually fairly clear here from this letter that the main purpose, or one of the main purpose, was to use a tax relief in a manner that wasn't intended to use, or just to get tax a relief from tax, and that was the primary purpose. So, for example, one way you might word your letter is the tax consequences of incorporation are, as opposed to the benefits of incorporation. Is that, you know, it is revenue can and have looked at the advisors' I suppose advice in relation to it, in trying and say, well, look, it's clearly here that, you know, this was the main or one of the main purposes of avoiding tax. So I suppose the key thing to get from this is, you know, watch your reports, watch what you're writing, make sure that you're wording it correctly, so that, you know, it's like you want to make sure that it's worded that it doesn't help any case to say that there is tax avoidance, or that the main purpose or one of the main purposes was avoidance of tax, which ultimately it isn't. You know, there always is going to be a bona fide reason. So you'll start out with, you know, what is the bona fide reason why it's been contemplated as a result. And I suppose sometimes in the reports, what I usually do is, yes, I'd start off and say, you know, you came to us, the main reasons for this, bona fide reasons are for this, or X, Y, Z. Then later on in the report, you say, look, while there is anti-avoidance here, you know, we believe that the anti-avoidance doesn't apply because the bona fide test is here on that basis. So, you know, I suppose I'm going to go into a little more detail on specific and general anti-avoidance in our webinar on the 1st of May. So if you're interested in this area, and I think everybody should be, because this is where I suppose tax legislation is going. It is going into general specific anti-avoidance. So you need to be aware of it. Like example, Finance Act 17 brought in retirement relief, entrepreneurial relief, that brought in further anti-avoidance there for transferring goodwill into a company, for example. So, you know, we're going to go through all those in that webinar. So hopefully you found that this query useful.